Morning traders. I had to play riding the storm out. It's kind of funny because I couldn't sleep much, and a little bit was Linda's party, I think, and Linda's birthday. A little too much fun, I want to say, but the markets were pretty crazy yesterday, and it's one of those things. When you have a big move, sometimes you start thinking about it. And so I played riding the storm out because that's what, sometimes these crazy moves are like, and being a US Coast Guard captain, as you know, that's I like boating, so I became a captain. But part of my career, being a trader for 46 years, but during the entire time, uh, loving boats, being a musician, right? And also having a liquidation company where I went to auctions, over 200 auctions. It's funny, there's a common denominator that kind of goes along with trading. I just want to make a quick point. We look for, as a captain, you look for signs, right? And you don't want to be reactive. You want to see what the weather looks like, where uh, if there's rain, is it coming your way? Which way the wind's blowing? How big the waves are? And you assess your journey based on all that. It's very similar to trading. We learn to navigate the waters, right? Navigate the trading. As a captain, you never just look at short term and be short sighted and say, wow, it's a beautiful sunny day, right? No, you want to know, like, is there a storm coming? Is the wind going to pick up? Are the waves going to get too big? And it's kind of like the market. With music, and trading is similar to music, when you look at these waves, it's kind of like the tempo and the rhythmic um, oscillations in music is very similar to trading, right? And then the auctions that I went to were really interesting because sometimes the value of some of the uh, products that were being auctioned off got auctioned up so high that they were actually above the retail price because, um, you know, the bidders and the buyers were just too excited to buy the product without thinking of the value. And that's when you have those spikes up on the top, right? When, you know, the very high of a move, we run out of steam because you realize that the only ones buying it up there are the retail, and they're emotional, and it's getting ahead of themselves, right? So all these things, came to mind. I don't know what it was when I couldn't sleep, but I just thought about it, and it's very, very much so with the way I look at these markets. So we'll talk about that. I don't think we'll have a slow time. And if we have a slow period, we'll do a lunch talk and everything. But let's look at the current situation now. The market, you can't trade what you think, obviously. I don't want to be uh, yeah, I know that everyone knows that for the most part. You got to trade what you see, and more or less the old analogy of, trade what you see, don't trade what you feel. Uh, and that's what we do here with technical analysis. Fundamentals are just so hard to try to figure out for me. Maybe for others, it's fine. I think of trading as a doctor thinks of how they look at an EKG or something. I remember one real quick, one friend of mine went into the doctor. He was feeling fine. He went in for a regular checkup. And next thing you know, he was on the table getting within like 24 hours, getting a open heart surgery. So if you ask the patient how you feel, he might say, I feel fine. I just come in for a checkup. But a doctor looks at EKG like we look at a chart and says, wow, you're not fine. Okay, so meanwhile, this rally has been a super strong rally. This year, I think we rallied 550 points just off the lows on the third day of January that we made the lows. So, and all I kept hearing was, we're overbought, we're overbought. Well, I don't look at overbought and oversold because that's just, those are usually indicators that will get you in trouble. You wait for the market to show you a sign, just like, we look for signs when you're a captain, you look for signs of how the wind is it picking up, is which way the storm's coming, right? And then you make your decision rather than assume. So we looked at this and we're being very careful in the room here after this break. And I felt when I looked at this break, if you just look at a daily chart, here's two ways to look at it. We have the Keltner channel. And if you were to draw the trend line in here, I had the trend line came in right around here. We traded below the 20 EMA, but we didn't close below it. We closed below it yesterday, but we also had a 3-bar reversal up there anyway. So that's the first sign, right? And over here, we held this area here, which we have not been below the 30 low moving average on a daily since uh, the 2nd of November, right? And that's when we started the rally. So we're at a juncture for me. It's could be very interesting. I think we have the first sign of a reason to think that the market might try to correct, but you do want to be careful that, sometimes everybody runs to the right side of the boat. I hate to use that analogy, but I'm a captain. And if you don't, get everyone to balance and run into the middle and have half and half, the boat will sink, right? But everybody pretty much, it was a dog pile out, but we saw some signs. We were looking. I mean, a lot of things were starting to point that things were getting a little bit funny, and we'll go through all the different markets. But consider like the $300 rally in gold this year, or the bonds selling off like they did, or the crude oil going from 76 up to 88. You know, quite the warning signs. But this is just, I'm not looking for a big break, but this isn't unexpected to me though, because the signs were there. So meanwhile, let's just look at each market. Right now, I feel like this 34.35 is very pivotal, because when we took that out, we picked up even more steam. We're on our way down a little bit on the correction, came back up right where we broke out, right? Let me get my drawing tools out here. A little easier when I have my drawing tools. You know me, I like to draw, right? It makes it easier. But we looked at this being a bull trap. We made the all-time highs during Asia and Europe this week, right? Opened up below the previous low, and we started to break, which was a bull trap, right? So what do? From there, we started to sell off, right? And we had this gap right here during the Europe session, which made it even more um, uh, a little bit tricky, because we gap lower. And what do? We came right back up to where we started the break, but failed to get above there. So that was a sign. That's the first sign. The second sign is that we got below this low and we closed below it. So these are the kind of things I look at. It's so funny how I put this up. I just happened to put it on Twitter before the break. And then, of course, some of it was the Fed, some of it was some of the, crude talk, and, but regardless, it's the combination of all of them. We were heading for some kind of, nice correction. We haven't had a down move like this in quite a while. But we're going to take one data point at a time. Very easy for everybody to get bearish, and it comes back up, and then it has a return lower. That's why I like to trade day to day in this environment, because we have so much going on that it's a lot easier to figure out where we're going to go today than to try to put on a trade and think where we're going to be in, let's say, June. That's what we do in the trading room, right? One data point at a time, but it's really important to look at what kind of day we're dealing with, what kind of market before we make our decisions. So the pivot is this 34.35 area. If we do get back above it, that's this low. The low that we made on Wednesday, right? And not only that, that's the bottom of the high volume node, and all these signs told us that we were probably going to have this kind of move anyway, right? So when you look at your dailies, you can look at these on your daily charts as well. But we do this all day long. I'm not going to get into that right now. Let's look at all the other markets. Okay, hang on. Give me a second here. All right, let's take a look at this crude. Crude has been the stud muffin, and we basically have been given guidance, Linda as well, and myself, that the gold or the crude is heading for 88 to the 90 level. Back, and this is quite a while back here. Let's take a look at the crude. This crude came a long ways. We started the end of December at $67, right? So we've almost rallied $20 in 3.5 months, and it still looks pretty much like it's not going to stop yet. So our pivot today is 85, 80, 85 area. So 80, 80, call it 85, 80. And we have some single prints here. They could come back in and fill it. But I feel like we're working on a poor high. First, we'll go take out and test this 87, 30 area, and possibly make it up to that 88.20, which I think that's really, that was the measured move that I was thinking about, that both Linda and myself were looking at for the goal of this rally and crude. It was extremely bullish formation. The action was bullish. So here we are, right? And of course, you can back it up with fundamentals, but as far as I'm concerned, it was pretty clear. Everybody knows I've been talking about this for a while. So the pivot is 85.80 today. If they get back below there, but this is kind of the inside pocket, then they can bring them down and we can get a little bit of push down. Do I think we're going there? Not really. I think we're probably going to test the highs of the day and maybe continue up. All right, let's look at the next chart. Let's take a look at this gold. This gold has been pretty amazing. We've had quite the rally in the gold. I'll bring up the gold here for a second. Let's look at the gold on the bar chart here. If you look at this low alone, just from April, or I'm sorry, from the mid-February, which is only about 6 weeks ago or whatever. 2018, we've rallied $300. I mean, that's pretty unheard of. You can see this move. When you look back at rallies in the gold, $300 in a month and a half is a bit excessive, but at the same time, the gold decoupled from the bonds for a while there. The gold, the EC, and the bonds were all moving together, and that was one sign. But you can see we started really to make a nice move here when we took this out, had a little bit of a bull flag, and if you measure these two stems out, we're pretty close to maybe a measured move up, but I think the gold still will continue up. It's still bullish looking to me. So when we look at the gold here, we've spent a lot of time up here, some pretty good volume, some price overlap. So we're trying to balance in this area, but if we take out the highs that we just made uh, yesterday in the gold, um, we should continue. So above that 23.35 area. I don't see why the gold needs to stop. It still looks good. In fact, we got a little bit of a trap from the overnight session here. And now you're seeing the gold move higher. So we have turbulence everywhere, right? Let's take a look at this EC. The EC had a nice move early uh, on Wednesday, continued on Thursday, but this was the big area where the EC sold off. And so that was big resistance for this for the EC. And I think it was too much too much too fast here. We had a gap, came back, filled the gap. And then this morning, what do? We test the overnight highs and we broke all the way back down. So we gave back two big up days here. Not looking so hot anymore, right? But this area, this 108.19 is kind of the inside pocket. I think we fell short of that. So you might see a little bit of a bounce here in this EC. EC pivot is 108.67. We have some pretty big ranges. Remember, the pivot is where I think the market changes in tone. So we could come back up here and still end up backing off later. So this this cave is very possible we make a move up there, right? It's these single prints. And that's where the pivot is too, which happens to be the PLC of the overnight market, kind of this tail here, high volume here in this previous US session in the low of the overnight of 2 nights ago. So big area, but we could come back up just to maybe try to fill in. I'm more in the camp that the EC is going to be under pressure first, like it is. And that's just, we could see just maybe a little bit of back and forth inside here in the morning. Okay. And if we look at the EC here, you can see how this looks on the two dailies. I just put up different ways to look at it. You had a double bottom here, and this is the inside pocket. All right. All right, let's move on to the next chart, which is the bonds. The bonds, again, had a technical breakout when we broke through here. And you could see it also on the dailies. Once we got below this high volume node, you could see what happened. Bond sold off, which was a big triangle anyway, breakout on the dailies, but we broke down, came back up to the high volume node, and we're right back here again. Bonds are looking a little bit on the heavy side, but I don't think you're going to see the bonds take out this swing low. I think they had their push down, a decent push down, similar to the EC. They're kind of correlated recently. They're still a little correlated, the EC and the bonds. And so we might fill in some single prints on the upside. I think we're not ready to take out that swing low that we made on Wednesday, but that's just me. It's all just my opinion. That's all. But if you look at the bonds, let's just put the bonds up for a minute. Hang on a second. Let's see. So I drew a little triangle so you could see how the bonds look here, right? When we broke that was the big breakout. And that's the red zone that I put in there. And you can see we came right up to it and we broke back down. This is the 200-day SMA that's been continuing sloping down and continuing lower, which is just showing the bigger trend was pointing down anyway, right? The bonds, might hold this low, but you could see how far down we went not too long ago, right? Last year. So I wouldn't count out either direction because right now I do feel like the bonds are still in a sell, but they could come back up, fill some single prints in first in the morning, and then who knows, could dip later on in the afternoon. Okay, so let's go back to our original drawing board, get ready for this morning to start. You can see that here's, yesterday was, I love these volume candles, how the volume and the expansion just continued. And then we get this climax on the close, which was very close to the low of the low this morning. We just tested low by a little bit. So we'll just let the market kind of guide us. And I'm going to go ahead and, oops, let's just do this real quick. And I just move this over so you can see the quick spike and into this climax low that we had. So we're going to get a little shake and bake this morning, and I want to let the first 15 minutes play out so that we can assess where we're going. All right, 5 minutes to go, and let's rock and roll.